Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Stu Gavin. He's president of the Gavin Management Group and an ex-NHL player, including some time with the Toronto Maple Leafs. Welcome, Stu.
Thank you, Rob. Great to be here.
Stu, your clients are NHL players and senior executives. It's high net worth financial advice. How does that differ from the advice that an average individual might get from their advisor?
Well, from our business, the big one and the high level is that they make a lot of money. All of them are gainfully employed, and I think from a risk side, they don't have to take as much risk to realize their goals because they have the financial incomes to achieve those goals.
So the comfort of having a big income coming
Yes,
in.
the big thing is most of them, a lot of the athletes are $1 million plus, up to $7 million. Some of the senior executives we deal with different incentive plans can be in the multi-millions as well.
Now, when you have that kind of an income profile, I imagine your financial needs are a little bit more complex than just a list of mutual funds to buy. Talk about some of the services, the broad services your firm provides these people.
It is a wealth management firm, a true wealth management firm, so the investment piece is one, but we're getting into cash flow, tax planning, structuring for executives and athletes, trying to look at asset protection so that they may be exposed from liabilities. There's and sometimes just things like helping real estate transactions, advising on them when they call in, have a need, and see if at least we can help them in whatever way. So it's just not focused on investments.
How do you charge for your services?
Big one is time and complexity. Everyone's situations are different. A young athlete, it's a lot simpler than, say, a senior executive, but it's a function of the time and complexity in their affairs. We receive compensation as a fee-based advisor on the investments, and we'll charge a fee based on the planning work and what has been done.
So you work on sort of there's a variety of ways that advisors get paid. They can get paid commissions on the investments they sell. They can get paid a fee based on the assets in the account, or they can get paid a flat fee. Sounds like you're using the latter two, fee-based and also a flat fee.
Yeah, we in our business plan we set out full disclosure so that clients know what and how we're compensated. At the end of the day, it's got to work for both people or both parties, and so the fees based on their assets. But some of the younger players or some people, they don't have really investable assets we may be able to manage. It may be in real estate, it may be in paying down debt, other things, but they can use the planning services.
Now, last question. You charge a fee based on the size of the account. What percentage is the fee?
1%, and then declining depending on the asset size.
Okay, and what would the gross amount of fees paid by some of your clients on an annual basis be?
Again, depending on the client situation, it could be as little as, say, a $5,000 and then going up from there. But we'll cap it. Big believer too that, you know, when you start adding millions of dollars in the account, you don't necessarily need to be compensated because you're already adequately compensated for your time.
That's great. Many thanks, Stu.
Pleasure.